When it comes to day trading, you normally hear people focus in and around small cap stocks. Why do they do that? Well, we're gonna dive into that reason right now. One of the main reasons why traders like to focus on small caps, especially when you're looking on YouTube and they're talking about small accounts, one of the main reasons why traders want to focus on small caps is because of the extreme volatility. That is something you cannot really find on big caps as often. We're talking about small cap stocks, a stock being under $1, maybe it's $1, going from $1 to $200 in a matter of 1 day, maybe 2, sometimes 3. And this is something that you can't find in the growth large cap stocks. You just do not see that. You might see it in the span of weeks, months, and maybe someone's gonna say, I saw one yesterday, but it's extremely rare. Small caps, it is rare as well, but it does happen much more frequent, and hence why so many day traders focus in and around small caps. Not to mention that small cap traders also tend to have a smaller account and they're a newer trader and they want to start to see some growth. And you can't see big growth if you're going for that extreme growth in a short amount of time unless you're trading a stock that has extreme volatility. If you're looking at small caps, meaning any stock that's worth 300 million to 2 billion, which is quite a lot of money, right? But in the stock market, that is a very small company. So understand, that is a small cap stock that can have very extreme volatility. But understand this, with extreme volatility means extreme risk. So you need to know that. You can't have one without the other. So if you're gonna play with the small cap stocks that have extreme volatility, then you need to know and respect that there's extreme risk with it. Because if you do not respect that, then you can blow your account in literally a second. I'm telling you, I've seen this happen to many traders. It's also the opposite. In a second, they can make a killing. But you need to know this so that way you can risk appropriately and not blow yourself up or not risk anything that you need to have in your bank account. Understand that. One of the advantages of these small cap stocks is that they are very cheap. That means if you only have $1,000, you can buy 1,000 shares of some of these stocks and sometimes 10,000 shares or 100,000 shares because they could be sub-penny stocks, meaning 0.00001 of a share. That is why people go in that direction. Because if you have $1,000, you cannot buy 1,000 shares of Apple. You just can't do it. You can't even buy a lot of shares of any stock that's in a large cap group, unless you're gonna try to dip into margin, which we're not gonna dive into in this video, but that creates a whole nother risk where you may end up owing more than you actually own. So kind of stay away from that, especially if you're new. The other thing around small caps is they are not well covered. No one knows about them. So the news isn't talking about small caps every single day. In fact, they probably never will mention their name ever, even if the stock goes 1,000% up in 1 day. But that would never happen in large caps. In large caps, if Apple went up 1%, they talk about it. If it goes up 3% in a day, they're like, oh wow, 10% up on the day, that's insane. They're literally talking about every second. But with small caps, the inefficiencies in that market where no one is talking about it, they're not known, could be in your best benefit. And that's another reason why traders who trade small caps really love that analysts and news don't cover them, because they might know something that can help them get a better edge and the whole market isn't aware of. Now, if you're gonna be focusing on small caps, you need to know that you want to be aware that there are specialized brokers called direct access brokers like Cobra Trading that you want to use when it comes to small caps. And here's why. If you're using a big box broker like E-Trade, Fidelity, any one of those big box brokers, you'll know real quickly some of them do not allow you to trade small caps. Some of them let you trade some small caps, but not the entire list of small caps. There's a lot of restrictions on the big box brokers, and they also have slower executions. They usually have smart routes and they have very few direct access routes. If you're curious about what that means, we made a video about this in the past, so definitely go check that out on our channel and hit that subscribe button, especially if you like this type of content. Now with the direct access broker like Cobra Trading, you're gonna be able to benefit from lower trade commissions. So if you're gonna be looking for an online broker, you wanna be looking out for that. How much am I paying per trade? The reason we're saying that is because these stocks are sometimes sub pennies, which means you might be buying multiple orders of this stock, which could cost you a ton of money if you're paying an extreme amount on your commissions. This is where you want to be picky here. Definitely check out your commissions. It doesn't mean everything, but it is a heavy part of your business. Trading is a business. If you're paying that expense, don't you want that expense a little lower? Don't sacrifice everything for expense, because of course there's a lot of things that matter when it comes to a broker and selecting someone who's going to help you execute trades every single day, and hopefully something that you can do for a living in the future. You want to make sure you get all the benefits, right? It's an evenly balanced package. That first thing is commissions. Make sure you have a great commission structure. We have one of the best commission structures on the market. You can check us out. Just go to cobratrading.com, click the live chat feature, and we'll be happy to help you there. And we also offer a free demo account, which means you can trade risk-free and practice on the platform before you put your money and use it, right? You don't want to just trade on a platform blindly without knowing how to use it. So practice with it first. And as I mentioned earlier, big box brokers sometimes don't have access to all the small caps out there. So you want to find out what markets you can actually trade with the broker you're looking at, and what specific stocks can you trade in that market. Because there's sometimes that they give you a list of small caps, but it's a very limited list, and you might not be able to trade the stock that you are wanting to trade. So that's a very important question. You want to find out what stocks you can actually trade with that broker. And of course, you want to make sure they have real-time market data, which the majority of brokers should have that, but you always want to make sure that you're trading with real market data. There's some traders who don't know to ask that question, and they get the default platform when it's time delayed. And if that happens, you are gonna be in for a hurt. So always ask that question, make sure you get that activated. You also wanna make sure that they have news platforms or some sort of platform that can help you scan the market, scan for news, scan for certain stocks that fit a certain criteria. You need to make sure they have that, so that way you can have all access to the entire market. Look for things that you want to look for and filter for the ideas that you want to filter for. And as I mentioned earlier, fast execution. Direct access market brokers have fast execution. Like here at Cobra Trading, we have multiple routes for you to choose from. Multiple. And we're coming out with new ones all the time. So definitely check us out when you get some time. Now, I know I mentioned trade commissions. You want to make sure you have lower commissions, but you also want to make sure that the shorting fees are reasonable. Every broker has different short fees, meaning if you want to locate shares for a trade to short, if you're going to go that route and bet that a stock is going to go down lower, then you want to make sure that they have a great fee structure for the shorts. Some brokers might have a great commission structure, but a high fee structure for shorting, which can really screw you in the end. Instead, you want to find a balance there. So make sure to find out what the fee structure is for not only trading and executing every trade you do, but also the average borrow rate. How much are you paying to borrow shares to short, and what that fee is. Here's the thing though, with Cobra Trading, you can find a ton of options when it comes to shorting. Some brokers might have a low commission fee, but a high short fee. And if that happens, then you're out of balance, and that's not going to be in your best benefit, especially if you want to short stocks, meaning betting that they will go down further. And what you want to do is also make sure that they have the shares available to short. Meaning, some brokers will say, yeah, we have shares available to short all the time, but they have a very limited access. It's not a pool that's just filled with tons of shares that you can just pick from all day. Sometimes it's a very small bucket. And if you don't get there first, there's none there. And then there's no point in even having that broker if the whole reason you went for a broker is to short stocks, but yet they don't have them available when you need them. That's a big problem. So make sure they have a good, healthy pool and options to short from. So if they only have one route to find shares to short, that could be an issue. Unlike here at Cobra Trading, we have multiple routes to look for shares to short. And you can also click the live chat feature and ask us directly, and we'll do it for you.